Boom! What's going on, guys? Energy News Beat, episode number 165 here on this gorgeous Monday, November 23rd, 2020. Happy week of Thanksgiving, everybody. As always, I am your humble correspondent, Michael Tanner, coming to you from an undisclosed location here in Denver, Colorado, joined by the executive producer of the show, the purveyor of the show, the director and publisher of the world's greatest website, oilandgas360.com, an international man of mystery, Stuart Turley. How you doing today, my man?
Doing great. I'm pretending I'm a pilot. Hey, you got to do something to be entertaining.
Yeah, I know. Well, hey, anything you do will make you look better than your normal state. So we'll go ahead and take that as a win. Guys, we have a great show for you lined up today. As you can see in the rundown, Chesapeake and Williams come to a new agreement, which is really going to, Chesapeake and their bankruptcy fallout that has to do with all of their midstream pipelines is fascinating. I've got another midstream pipeline story coming up. So if you're a fan of midstream, you're going to love me today. Stu's got some crazy stuff in the international news as he's wildly busy. We'll check out the equities markets, which sort of have a mix back. But first, guys, just subscribe to this YouTube channel, oilandgas360.com. We really appreciate all the support. Hit that pesky subscribe button. Like I said, stream it all day, every day. Do it before dinner, right after dinner. You never know when we could upload a show. But we really appreciate all the support. And when we look at the equities markets today, let's just look at equities first. Mixed bag. Tech stocks were down as more good vaccine news comes out. So, as the economy begins to reopen, Amazon's not quite going to do as good because not everyone can just stay home and binge Netflix and buy everything on Amazon. So as you'll see, tech stocks, when they go down and the SPY goes up, that's pure coronavirus reopening news. Now, the problem is places like California, Colorado, where I'm at, Michigan, Chicago, California, or New York, they are all now in basic limited stay-at-home orders. I doubt we ever go back to quote-unquote stay-at-home because of the backlash that might come politically, but we're about there. So it'd be interesting to see what happens on the demand side, specifically for oil. The crazy part is oil's up 1.5 percentage points today off this new AstraZeneca vaccine news. That was kind of the market thing. SPY was up about a half a percentage point off a 90% effectiveness of now a third coronavirus vaccine. AstraZeneca, they're here to help, or as the commercial would always go that would play during CBS football. Nasdaq, as I mentioned, was down about a tenth of a percentage point. Dow Jones was up 1.2 percentage points. You can really see how those large cap stock companies, specifically airlines, are going to benefit from any one of these vaccines coming out. ES contract is positive. Our NQ contract, which is our Nasdaq futures, has rolled negative so far. As I mentioned, crude oil's up 43.06. Holy smokes, $43. Let's have a little party here. Haven't seen that number in a while. Up 1.5 percentage points. Again, guys, vaccine news is positive for crude oil. That's about all I can tell you. It's what the market's telling us, so just play along. But look how flat this curve is, Stu. Front end of the curve, 43.05. Back end of the curve, 43.87. Holy smokes. They talk about a flat curve. I don't even think I could limbo that low. But crude oil is doing its best impersonation of that. $2.71 for natural gas. They're up 2.5 percentage points. Just some really warmer weather rolling in or colder weather that's going to start coming in as we move into December month. As we remember, November was probably one of the warmer Novembers we've had on record going back all the way to 2000. Hopefully it looks like December is going to turn a little colder, which is going to be good for natural gas markets. As you can tell, front end of the curve up to 271. That's 2.5 percentage points. Back into the curve, $2.84. That's only 0.3 of a percentage point. XOP contract. You want to talk about ripping today? Overall markets up 0.6 of a percentage point. Our XOP contract up 8 percentage points, $4.24 on the index, all the way up to 56.29. OIH did even better, up 8.8 percentage points, 143.89. And so what this means, before we go any farther, it's very simply $42 to $45 oil now becomes slightly profitable for oil companies, or at least that's what traders view as. Companies may think they have break-even points at 20 to 30 to 35. They probably don't. The lowest you'll probably see from any analyst who's covering an oil and gas company or an E&P company, they're going to put it $42, $43 above. So why do you see oil now all of a sudden $43? Why do you see Callon Petroleum, as we're going to cover, up 24 percentage points? Well, now they're not on the brink of bankruptcy anymore. they can stave off. If you're an investor, you might there's some money to make. CDES of 20 percentage points. Why? Well, they can probably, if oil's $43, they might be able to survive and not have to file Chapter 11 bankruptcy. So I mean, the numbers that we'll see on the upside, and we'll cover them quickly. First, downside numbers: Transatlantic Petroleum down 4 percentage points. Gulfport was down 4 percentage points. Vallejo down 6 percentage points. High Point Resources, which is about to be acquired by Bonanza Creek, is down. But these numbers we're seeing on the upside, guys: WT Offshore, Abrejas, Cosmos, Gran Terrera, CDEF, Callon Petroleum. Why are they all up? Well, at these numbers, at $40, $35, $40 oil, it was going to be a tight squeeze for them to continue operating. Now, if we continue to see vaccine news, if oil continues to be bullish, I mean, some of the news rolling out, we could see $50 oil come Q1 2021. Holy smokes, I'll take that number. These now companies could begin to make a little money. I mean, not that we need to see, the last thing we should be seeing is rigs coming online, but at least they can be making some money. So, I mean, it's kind of funny. Last week we see rigs come online. It just makes me crack my head. It's the same sick cycle we get ourselves in. Oh, great. Oil price going up. Let's add more rigs. Supply, demand, folks. You learn that your first year of college. When you increase the supply, price goes down. You didn't. Adam Smith told you that first, not me. Before we dive into the international news deck, guys, this show is powered by Data Gumbo, which is an award-winning technology with customers all around the world who built, manage, and automate their own smart contracts. Data Gumbo smart contracts offer a new approach to commercial relationships, one that reduces friction to deliver streamlined operation, transactional certainty, cost savings. OpEx has never been easier to cut with Data Gumbo, guys. Check everything out, www.datagumbo.com. Stu, what's on the international news desk today?
I'll tell you what, buckle up.
Yeah, I'm going to take a little sip of water. It's like what's the in-flight movie?
Yeah, put your tray table up. All right, it wouldn't be Thanksgiving without us talking about turkey. Here is one of my stories. I love geopolitical futures. Turkey is broke. And they have absolutely have theft, they have corruption, they have everything that's in a good novel going on. And they've now, Turkish authorities, let me give you this quote, have issued arrest warrants for more than 100 members of the Democratic Society of Congress accused of having links to a terrorist organization and stealing money. That is the Democratic Congress of Turkey. I just thought I'd let you know. Now, let's go to Turkey. Again, they're seismic. They have been going with Libya all across the Mediterranean, and they've been just going around and saying, we have all of the Mediterranean. Okay, you see that? That's pretty good technology there. So the NATO members of Turkey and Greece, and they're trying to knock them down, and they say they're not going to do it till November 29th. Go figure that out. So now that Greece, the third part of this turkey story today, so it's a three-legged turkey, and that is UAE and Greece just signed a peace treaty. That was number 4 that I had been talking about. Just signed it today. So everybody's ganging up against Turkey because they're the biggest guy in the area there. All right.
I can't keep all of this story straight. And as far as that three-legged turkey, did he take the new coronavirus vaccine?
I bet he did.
I bet he did. That's where he got the third leg.
That's right. That's where he got the fourth arm. Okay. Look at this. We have the Prime Minister of India. I love Prime Minister Modi.
You've had lots of praise for him. We love Prime Minister Modi.
I want to get him on the show. They are doubling their refinery capacity in the next 5 years.
That's oil refining, right?
Oil refining. Now, they have a balanced diet of power. They got solar, they got wind, they got nuclear, they got natural gas, they got so many people, they got to get power any way they can. The country's energy minister was quoted on June as saying the oil refining capacity could jump 450 million tons in every 2 years. The current level is 250 million tons. That is a huge chunk.
It's a huge chunk. And Prime Minister Modi, we're happy to help out any way we can.
You bet. And I'll tell you what's so great about the Indian government and everything else is that oil is not going away, but yet they're going right down the way to say, uh, wait a minute, we're getting the best power we can to our people. I wish more governments would do that. Okay. I'm a little surprised by this one here, Michael. Supply, demand, price. There is a little, this is our little economics class, right? Supply, demand. Okay.
You're killing me.
Yemen, yeah, I'm just knocking it out of the park on this one. Yemen just says they fired missiles at Saudi Aramco site again, and they actually hit something, which is surprising.
Really?
Yeah, they hit something. So here is something that is not even on the news. It's not a blip, but it is on our news desk. So when you sit back and think, wait a minute, we would have something like this a couple of years ago, and oil would go to like $900 a barrel.
Exactly. If this happened, remember the missile strikes in October of
Yeah,
2019, the drone strikes? That was a huge gap up.
yeah, and they
Just
even said,
wild. I saw you drop me this story. I furiously back checked this story when you dropped it in the Teams chat because I was like, wait, you're telling me there was a missile strike on a Saudi Aramco pipeline and oil did nothing. It's just the fundamentals make me want to fall out of my chair and not stop breathing.
oh yeah. So I'm sitting here kind of going, oh yeah, we got a missile strike next. Okay. Going on to ADNOC, and we're sitting here. ADNOC has really found, this is kind of cool, 22 billion stock tank barrels onshore. This came in addition to the 2 billion conventional oil discovery. Now, if you've got a 22 billion oil discovery, how do you feel about that guy that just did the $2 billion? He's feeling pretty insignificant. He had a bottle of champagne. This guy is having an oil barrel of champagne.
He's having
Go figure that out. He's having a case. Anyway, UAE, ADNOC, they're pretty happy. $22 billion or 22 billion barrel unconventional find.
Oh, just what we need, more unconventional oil in the world. Perfect. Let's just throw it on some tankers sitting out front of California. They love it.
We need a tanker.
Yeah. Moving over to the U.S. shale side, I mean, it's going to be, I'm not going to say it's going to be a slow week. My gut is it's going to be a slow week. Thanksgiving, everybody's, all these guys are in Aspen in their second ski homes, so they don't really have time to drop any press releases. A couple things, though, both of them on the midstream side. As I mentioned, if you're a fan of midstream, you're going to be a fan of me today. I've got two interesting stories. One involves specifically Chesapeake and Williams, and then another kind of is the outlook for some of these players down in Texas. First, guys, as you know, when a company declares bankruptcy and an operator declares bankruptcy, they have volume commitments that on the back end they've committed for what generally goes out 10, 15, 20 years in order to not only get the best price, but that's just how these contracts are written. Well, it's been widely known that through bankruptcies, these contracts don't go away. They're very hard to eliminate volume commitments. Well, what is, generally it's resolved either through the courts, which when it's resolved through the courts, guess what? The E&P, whoever buys those assets, unless wherever those assets get sold to, whether it's a 363, whether it's a restructuring Chapter 11, those volume commitments pretty much stay the same. Stay the same because that's what the bankruptcy court says. What happened in the Chesapeake Williams situation? Remember, guys, 2 years ago, Chesapeake was 23% of all Williams pipeline capacity. Unbelievable the amount of dependence they have. They've since weaned themselves down to about 6%. But their volume commitment, they've agreed to a new term outside of bankruptcy. This is really rare. Normally, the volume commitment is just the same, but there's now a new, and they've amended the agreement, and I'll kind of give you the highlights here. As part of Monday's agreement, Chesapeake will now pay all pre-bankruptcy and past receivables related to the midstream expenses as per existing contracts between the companies. Chesapeake will also enter into a long-term supply gas commitment of up to 150 decatherm per day for Williams Transco Regional Energy Access Pipeline. The producer will also not reject Williams gathering agreements in the Eagle Ford, Marcellus, or Mid-Continent. So just remember, 6% of its revenue is now coming from Chesapeake, down from 18% 23% 5 years ago, and as little as 2 years ago, 23% of their volume was coming from Chesapeake. So that was talk about a relationship between two companies. Woo-hoo. Even the big companies have large clients, and have big clients. So what's interesting is, as we thought that, as Energy Transfer, and as we'll cover here in a little bit, there's a little battle going on with Chesapeake and Energy Transfer Partners, but good to see Chesapeake and Williams clear this up. I think the market's going to enjoy that. We saw Williams rise a little bit today. On the other, pipeline front, as you mentioned, we have all these operating agreements. Well, occasionally they do actually expire, and you can get out of by having them expire. What's interesting is December 2020, think about it, December 2020, they probably set 10-year agreements. Well, now we're having a bunch of these expire. Stu, the list of pipeline fulfillment volume commitments that are due to expire, let me just read you off a little list here, okay? Let's give this. Lowe's, I'm not making this up, Lowe's, not the same Lowe's that we talk about the hardware store, but Lowe's Corporation, Texas Gas Transmission, LLC, 6% of its monthly, or 6% of its monthly volume, equating to $2.8 million in revenue. Boom. Expiring with no fulfillments coming up. Oh, Stu, it gets worse. ETC Tiger Pipeline, 41% of its contracted capacity, costing the firm $2.1 million in monthly revenues. 41% gone. The 200-mile Energy Transfer Pipeline, remember that? Well, this pipeline had been taking oil, hadn't been taking all of Chesapeake's. Remember, there was 23% of the contracted capacity was with Chesapeake. There's looking like there could be an amendment to that agreement we just covered. Get this, Kinder Morgan's Trans-Colorado Gas Pipeline, 22% of its contracted capacity, worth $3 million per month. Fayetteville Joint Express, get this, Stu, which is a joint Kinder Morgan Energy Transfer Pipeline, 92% of their reservations are due to expire at the end of November, and there's no comment when asked whether they were set to whether they've been recontracted. I mean, that's a lot of open volumes, and if you're in the midstream space, I'd love to hear your guys' take on. Email us mtanner@entercominc.com. That's wild.
Michael, we just ran a story on 360 today. I have to go look it up, but it was in California. They just finished a 90-mile natural gas pipeline. I bet it's going to be zero since they're outlawing natural gas in California.
Well, yeah, it's just, I was reading this article this morning. I was like, holy smokes. I mean, when we talk about these contracts with midstream volumes are unbreakable. Well, there's one way to break them, and that's just see them through. And if they're on these 10-year chunks, December 2020, it's a reckoning. So it'll be very interesting to see if a lot of these companies are able to fill it out. We'll be covering that. Stu, we miss anything today?
I don't know, but I'm tired from going around the world, man.
Yeah, holy smokes. We'll put our trade tables down, take our final descent, guys, let you get out of here, get back to work. Thank you for checking us out. Energy Newsbeat, episode 165. We will see you guys tomorrow for another episode.